Welcome back to Explain the Charts. Today we'll be looking at NZDUSD, the New Zealand dollar against the US dollar, and examining both the news and the chart data to see what we can learn about where this pair might be going. There has been significant movement in NZDUSD recently, and it's important to understand why. First, let's look at the news. According to recent news, the Reserve Bank of New Zealand, the RBNZ, has unexpectedly cut interest rates. The RBNZ cited progress towards meeting its annual inflation target. This move has put pressure on the New Zealand dollar, making it a weaker currency. However, the US dollar is also facing pressure. The Federal Reserve, the Fed, is expected to cut interest rates. This is putting pressure on the US dollar, making it a weaker currency. The recent downward revision to US GDP for the second quarter has further bolstered the US dollar's weakness. So we have two major economic powers with their currencies weakening, making NZDUSD a potentially interesting pair to watch. Let's now move on to the charts. If we look at the daily chart, we can see that NZDUSD has been on a bullish trend in recent months. The pair has been rising steadily, and it's currently trading at the highest point since the beginning of the year. There's a clear upward trend line on the daily chart, which has held as support throughout the recent climb. However, the daily chart shows that NZDUSD is approaching a critical resistance level at 0.6300. This level has been tested several times in the past, and it has been a strong barrier for the pair. It's worth noting that the pair had been struggling to break above this level in the past. If NZDUSD can break above 0.6300, it could signal a continuation of the bullish trend. The next resistance level to watch is at 0.6500, where there's another area of potential rejection. Now, let's switch to the 1-hour chart and see if we can get a better understanding of where the pair might be headed in the near term. If we look at the 1-hour chart, we can see that NZDUSD has been consolidating in a range recently. The price action is showing signs of a potential breakout, and this is where the news and the charts align. The recent news about the RBNZ's interest rate cut may be the catalyst for the breakout. We can see that there is a clear support level at 0.6200, where the price has bounced off multiple times in recent days. The 1-hour chart also shows that the pair is nearing the top of the consolidation range, which is at 0.6275. If NZDUSD can break above 0.6275, it could signal a bullish breakout. On the other hand, if NZDUSD fails to break above 0.6275, it could signal a reversal of the recent bullish trend. The next support level to watch is at 0.6200. A drop below this level could indicate a bearish breakout. Let's take a look at the 15-minute chart to see if we can spot any patterns that could suggest a breakout or reversal in the very short term. The 15-minute chart is very volatile, but it can give us valuable insights into short-term market movements. We can see that NZDUSD has been consolidating in a range on the 15-minute chart as well. The pair is currently testing the top of this range. The recent news could be the catalyst for a breakout above this range. On the other hand, if NZDUSD breaks below the bottom of the consolidation range, which is at 0.6150, it could signal a bearish breakout. The 15-minute chart will be very important to watch for traders looking to capitalize on short-term market movements. Traders should look for a break of either the top or bottom of the consolidation range. Now let's summarize the key levels to watch on this NZDUSD pair. The daily chart shows a key resistance level at 0.6300. The 1-hour chart shows a potential breakout level at 0.6275. The 15-minute chart shows a consolidation range, with the top of the range at 0.6250 and the bottom of the range at 0.6150. Traders should be watching these levels very carefully in the coming days. If NZDUSD breaks above 0.6275, it could signal a bullish breakout and a continuation of the long-term upward trend. If the pair breaks below 0.6200, it could signal a bearish breakout and a reversal of the recent bullish trend. Traders should be prepared for either scenario. The likelihood of a breakout or reversal will depend on a number of factors, including the direction of the US and New Zealand economies, the decisions of the Fed and the RBNZ, and the overall market sentiment. Traders should be carefully monitoring the news and the charts to get a better understanding of the overall market sentiment. Remember, trading is risky, and it's important to always do your own research before making any trading decisions. Good luck and happy trading!